Welcome to the Startup Checklist. We've got about an hour we're going to go through, but just wanted to cover a couple of things beforehand. My name is Rainer. I'm one of the Small Business Development Center advisors. I'm out of the Brunswick office, but there are about 12 of us throughout the state. Most of our work is done one-on-one. We're a free service. We're funded by the SBA, as well as through host organizations. We're here for you. About half of our clients are pre-existing, so people who are in business looking to hire their first employee, put together a marketing plan, so on. And the other half of our clients are in your shoes, the people who are either recently started or who are thinking about becoming entrepreneurs. Because most of our work is done one-on-one, I'd invite you to reach out and find out who your advisor is. Like I said, it's free, it's confidential. That's the majority of our work. We love doing it. We're all full-time advisors. We're here for you. Most of us either have run a business ourselves in the past, or we have our MBAs. And so we have a little bit of knowledge, but more or less we come alongside business owners. We spend between 2 and 4 hours per client, just helping them where they are and try to get to where they want to be. As we dig in today, we're going to be talking about the startup process, what it takes to kind of get your business off the ground. This is being recorded. We'll email you the recording after the session's complete so that you can reference anything. I'll also email you the slideshow so that you can take a look at any of the links that I include in it. I know it says on this, housekeeping, submit any questions in the chat. It's a small group today. I'd invite you to just take yourselves off of mute, interrupt me, and ask the question. If you've got the question, I guarantee somebody else probably has the same question. So, I'd rather have an open conversation, discuss what needs to be discussed, cover, the questions that you have as we go through it. But if you're nervous about it, if you're worried about the confidentiality aspect, please, again, reach out after the fact. We can set you up either with myself or with another advisor and help you. What do we do? I already kind of covered that. There's a picture of me as well as some of the other advisors and how to use this checklist. So one thing I'd like to start with is just in the chat, drop a little number, 1 through 5, right? Where are you in this process? If all of you are in business, I'll speak to that. If all of you are right in number 1 and kind of thinking, geez, I might want to be an entrepreneur one day, but I have no idea who, what, when, where, why, how, then I'll cover some of that information in more detail, which just helps me see where you're all at. Okay, perfect. So fair number of people with an idea, kind of in that middle gray area of maybe I'm have a few sales, maybe it's a hobby that I want to make something more. And then that ever-present question, am I doing this right or what am I missing, right? That, am I staying up at night? Talk a little bit about market research, right? Feasibility and planning. So a lot of running a business is understanding, is this a good idea? And will people pay me to do it, right? We've got some wonderful businesses that are essentially glorified hobbies. So I've got some great clients that have wonderful ideas and they just like providing a service or providing, a product. And they're not that interested in selling, or they have, full-time day jobs. And that's wonderful. So, I encourage that, absolutely. But if you're looking for this to generate revenue for you, to become a primary source of income, or at least a secondary source of income, then understanding who your customer is critical. Okay, so feasibility and planning. I like looking at the triangle that is your competitors. And when I say the triangle, there's really 3 things that you can compete on, right? It's quality of service or quality of product. It's cost. Are you the highest cost or lowest cost? And quality, or speed of service, right? So if you think about that triangle, you can really only compete on 1 or maybe 2 of those. And it depends where the rest of your competitors are positioning themselves. So one of the ideas of competition analysis is saying, okay, where is there a gap in the market that I'm trying to answer? And do my potential customers, my potential clients, understand that gap? And are they looking for something that is missing in that triangle? If everybody in the market is the highest quality, maybe there's an opportunity to be slightly lower and slightly more affordable. If everybody in the market is 9 months out and booking 9 months out, maybe there's an opportunity to be the newcomer and meet them halfway, or only be a couple months out, or provide a service that is faster and more efficient, right? Alternatively, if everybody's competing to be the cheapest, don't try to be the cheapest, right? Try to be a higher quality or a faster, more efficient service. So understanding where you are and where the customer needs somebody to be is all part of that communication. And it's got to be external, right? The number of people that I have talked to me about their restaurant that they want to start because their kids love their food, it's a great starting point, but their kids aren't going to pay them, right? So you have to get out in the market and understand what the customer wants. The best story I have for this is a customer I had a few years ago. This was pre-COVID, who developed a deck of cards that he wanted to. It was a game that was a card, a deck-based game, and he was having trouble finding people to play with him. And he came up with this idea that he could get a ticket, plane ticket, out of Portland Airport to, I think it was Hartford, for like $39, one-way ticket, less than an hour in the air. And he would go in and he'd go through security and he'd go right up to the podium and he'd say, okay, I'm not going to fly today. So don't page me a bunch of times. And then he would be in the airport past security with a bunch of people who were bored and had nothing else to do. And he would spend the day just walking up to people and asking them to play this game. It was a phenomenal way to have market research. He would just play with them, he'd get them to engage, and then afterward he'd say, okay, did you like it? What did you like about it? What could be improved? Okay, I'm going to change this rule. I'm going to make this a little faster. I'm going to add this, additional card, this additional character to it. And so he did this a couple of times. He played more than 100 games with people who were just bored, right? And then he took it a step further. So he refined his deck. He figured out that he could make this deck of cards for about 60 cents, get them printed. And so then he would do the same thing. He'd go in, he'd play, and then he would say, you can have this deck of cards and go play with your friends, your family, if you leave me a review, right? And for the 60 cents it cost him to print it, he'd get a 5-star review. One, because they felt obligated to, because he's sitting there talking to them. And two, because they wouldn't leave him less than 5 stars if he was sitting there looking over their shoulder. So by the time he launched his business, he had over 30 reviews online, all praising his product. And he was fairly confident that he had done the market research. So getting out there and talking to a customer, presenting your idea is so critical in this process. And one of the things that I have behind me in my office, I don't have it here, but is this sign that says, kill your darlings early, right? If you're in love with your product, that's okay. It's good to have that passion. But understand that there's a difference between loving your product and understanding the market, right? And there's two ways about this. One, you can love your product so much that you are unwilling to change. And that's okay too. But that requires very specific market understanding. Who else will love this product as much as I do? Who else will love this service as much as I do? And I can only present it to them. I can only give it to them. Or alternatively, if I understand the market I'm looking at, what do they love about this product or service? And how am I tweaking that product or service to match their needs, right? There has to be that match between what you're offering and who you're offering it to, right? So what, who cares? Two questions in marketing. And how is that communication being made? If you love it so dearly that you're unwilling to change it, you have to be very refined and specific about who you're offering it to. Go out and talk to customers, right? So another question that comes up is, what about my business plan, right? Don't I need a business plan? Well, I'm spending all this time writing a business plan. Raise your hand if you're in the process of writing a business plan. You don't need a business plan necessarily. And I know people are surprised when I say that. Most businesses feel like they have to have one to get off the ground. The business plan is written for a specific audience, right? So identifying who that audience is early is so critical. If it is for you, and most business plans are written for an audience of one, then understand that first and foremost. Do you need to spend 2 hours writing a management section of your business plan if you are the manager? No, right? Who's going to read it? Who needs to know that information? You're already it, right? So don't waste time on the areas of a business plan that you already intrinsically know and understand. What you should be doing is find a template or find, a blank business plan or a sample business plan. And we've got loads of them. So if you've got questions, reach out and look at the areas that you feel uncomfortable with. Because what a business plan is trying to do is look at the whole, right? Look at the whole aspect of the business and the various things that feed into it. You might know 90% of it. And if you know 90% of it, then your business plan should be geared entirely on the 10% you're uncomfortable with. Because before you, pull the trigger and dive in, you want to know that you've thought about everything. So that's the first audience, right? If you're writing a business plan to get a loan or to get an investor, that is a very different audience. Still all the same pieces, still the management and the product and the market and the competitor, but it's about the justification of the funding. It's about, here's what I need to get this business off the ground, and here's how I will pay it back. Here's how the business will pay it back, right? So understanding that financial aspect of the business plan, the written aspect essentially becomes the written justification for the revenue, the overhead expenses, and what is left to support the debt that you're asking for, right? So the audience, the intended audience of the business plan drives the entire design of it. Any questions on that? And again, I give you permission as a business owner, if you're not looking for a loan or an investor, to not spend a lot of time on the business plan. Read through it, make sure you understand it, make sure you're, addressing each aspect of it. But if you know it, then you know it, right? If you're uncomfortable and you want something written down, great, jot it down. Put together a little plan of the number of customers that you want, of how you're going to communicate with them, right? But that idea of the value, where you fit in the marketplace, and the communication of that value is what drives the majority of the business plan, right? It's that you can have the greatest product or service in the world, but if nobody ever hears about it, then nobody will ever pay you to do it, right? So identify the product, identify where it fits in the marketplace, where it fits in that triangle, where the gap is, identify who's looking for that gap to be filled, and then identify how you're communicating it with them. All right. Now we dig into the really exciting stuff, right? The legality of a business plan. How do I start a business? What does it take? Frankly, right? The second that there's a transaction that takes place for good or services, the second that somebody pays you to do something or make something or pays you for something that you've made, you're a business. You did it. Congratulations. That's the end of this class, right? No. The question then becomes, okay, so I've created this business. I am a sole proprietor. It's the definition, right? The default position of a business called a sole proprietor. How do I do it well? And how do I not get in trouble, right? So the not get in trouble is really where we're going to focus the rest of this conversation. So licenses and permits are the not get in trouble from the state, the local, and the federal government, right? So the first thing I would say is talk to your municipality, talk to your town, right? Because two things that you want to talk about. One, some towns require a business license, right? I live in Cumberland. I have a dog. I have to pay $40 a month or a year to have a dog in Cumberland. Every town is unique. Some towns require a business license and some don't. So if you plan on running a business, even if it's out of your home, check with the town. The second aspect that you should be looking at when talking to the town is the code enforcement officer, and say, okay, is my house zoned to have a residential business in it? And this is a gray area, right? And again, it's town by town, so it's worth talking to. Some towns have restrictions for noise ordinances. So if you're doing heavy manufacturing out of your garage, that might not be great, right? Some towns have restrictions on smells, right? So if you have a particular odorous business, then that's something that you'd want to be aware of. Other towns have restriction on traffic, right? You can't be running an Etsy store out of your house if the FedEx truck is coming in 3 times a day, right? So understanding what restrictions your town places on where you plan on doing your business will let you know. Signage, another big one, right? Can I have a sign out front? That's town by town. So licensing, permitting, start small, and then take a step back. Maine Business Answers, and this is a link, and I'll send you the link as part of this PDF, is a great resource. It's 2 full-time employees, and their entire job is to maintain an understanding of the statewide licensing and permitting requirements. So if you say, hey, I'm doing this in my industry, what do I need at the state level? They will tell you. And that's broken down by industry, which is a fantastic resource. I throw that out there as well. Some of these things take time to get. So the earlier in the process that you are, the better off it is to start going down this rabbit hole and say, okay, what licensing, permitting do I need? One thing that's not on here, but I like to throw out there, some industries also require a license or permit. It's rare to have it be at the industry level and not at the state or federal level. But like real estate comes to mind, right? To be a realtor, you need a real estate license with the National Association of Realtors, right? So understand your industry, at least broad brush, what is required to call yourself somebody in that industry. I'm going to skip over this for a moment and jump to insurance. So one of the things, licensing and permitting is, am I going to get in trouble with the state if I start doing this? Am I going to get in trouble with the local office? Next couple of slides are going to be about customer-based risk, right? The issue with customer-based risk is that it's really about whether or not you get sued for doing what you do. We're a fairly litigious society, so there are frivolous lawsuits that get filed and then eventually dismissed all the time. There are some factors here that I would start with, and that is determined individually, right? So what is your risk appetite? How comfortable are you with the idea that you may or may not be sued at some point in the future? What risk do you associate with your industry? Do you think, okay, geez, I'm going to be a sushi restaurant, or I'm selling wood carvings on Etsy, right? What is the expectation that you may get sued because somebody experiences something poor associated with what you do, right? And then what are you trying to protect is the last piece here, right? I have business owners who say, I have a fairly high risk appetite and I rent my house and I drive a beat up old car and I don't have a huge amount of money in savings. Sue me for all I'm worth. If there's nothing there, go ahead. Why not? So, all right, that's insurance, liability waivers, communication with the customer, setting up an LLC or a legal corporation. You might not need any of that because you might just say, hey, if I get sued, I get sued and I'm not worried about it. Okay, great. Those things are optional and we'll go through each one. But that's the path, right? So when you start talking about, okay, I have things that I want to protect. I have personal assets that I want to protect from the potential liability of this business. I'm working in an industry that I associate with some risk, right? I have a lot of customer interaction. There's the potential that one of them has umbrage with the way I do business and decides to file a lawsuit. And I have a low risk appetite myself. I get nervous about this. Great. Let's put some barriers in place to protect you, right? First line of defense is always going to be your insurance, right? So insurance, just like if I'm driving down the street and somebody rear ends me, pick up my phone, call my insurance agent, they deal with it, it goes away, right? So there's baseline general liability insurance, just kind of covers a liability associated with your business. There's workers' comp insurance, which protects your employees, right? Which may or may not be you as well, depending on how you treat it. Health insurance, you can, file through a business. Auto and property insurance protects your vehicle if you're using it for business purposes, property. Key man insurance is something that comes up, and it's often required by a lender if you are the critical person associated with your business. Essentially, it's the lender's way of saying, hey, if you get sick, it doesn't matter how good the business is, you're it, right? So for a lot of small businesses, they're asked to take out a key man insurance policy that protects essentially the bank in the opportunity or the chance that something happens to you and the business isn't able to pay the bank back. Someone asks, as a small business, can we use our regular auto insurance if we're traveling with stuff for our business? I would double check with your insurance agent, right? Call up your car insurance and say, what is protected, what isn't protected? And again, so these kind of barriers that we're putting in place, I like to think of as like a Venn diagram, right? We don't need everything to be overlapping circles, but we also don't want a gap to occur between things, because that's where liability falls through to us personally, right? So I try to have a little bit of overlap between our insurance policy, our customer communication, and our waivers, which we'll talk about in a moment, and then like the LLC formation, the legal formation. So insurance, I would call your insurance agent. I would say, here's what I am planning on doing. Am I covered? Better yet, email them so you have it in writing when they respond, right? You may also need a specific industry insurance. And again, that's a great opportunity to converse with your insurance agent, talk to a few. We have recommendations if you're looking for a local one who does small business insurance. But if you do, a lot of paperwork or contract work for clients, you might want errors and omissions insurance, which protects you against errors and omissions and, written execution. You may need malpractice insurance if you're thinking about opening, a health business of some kind, right? So talking to them and say, here's my exposure, here's the industry and what I'm intending to do. What do you recommend? How do I protect myself in this? Then again, 5 years down the road, you get notified that you're being served papers and you're mentioned in a lawsuit, pick up the phone, call the insurance agent, they deal with it, it goes away. What happens if the insurance company comes back and says, you're not covered by this? We decided that you did something wrong, right? The next step in that liability waterfall is your own waivers, your own contracts, because what will happen is if you are being sued, your insurance doesn't cover it, you go to a court of law, right? Could be criminal court, could be small claims court, but that's where you're preparing to talk to a judge. So if you have a contract that your customers sign, right, that's the easiest way, that releases you from liability of XYZ, or you state specifically that you're not responsible for ABC, and the customer reads it and signs it, and you just show that to the judge, right? You say, hey, it says right here that I'm not responsible for this. Then they're trying to sue me for it. But they know that they can't sue me for it because they read it and signed it. The judge says, you're right, and dismisses it, it goes away. Same thing with communication on your website, signage in your restaurant, right? If you say this product may contain nuts, all of those safety things that we work with, you're really doing two things. You're trying to communicate with the customer and educate the customer. That's the goal, is to protect yourself on the front end by letting the customer know the risk that they're taking on by working with you or by buying your product. This is not intended to go around your neck. Don't put it around your neck, whatever it is, right? The second thing, a little more pessimistically, is you're preparing to show that to the judge, right? Listen, Mr. or Mrs. Judge, Your Honor, it says right here that this product contains nuts. It's bold lettering on the front of the product. They bought it, they ate it anyway, even though they have a nut allergy. I can't be held responsible for the fact that they knew they had a nut allergy. They knew that it contained nuts and they ate it, right? So again, it's a little more pessimistic, but how do you protect yourself in that communication with the client? How do you put that in writing so that you can defend yourself? If you're any kind of a service-based industry, focus on that contract of work, that agreement that you're putting in place beforehand. If you're any kind of, retail product orientation, what does your packaging look like? How are you communicating with the customer about straightforward risk associated with your product? Do you have to go overboard? No, but be clear, be specific. And again, that works hand in hand with the licensing and permitting. A lot of those kind of OSHA requirements or, DHHS or, the Food and Drug Administration, those things are pains to go through and work through and make sure you're checking off all those things. But that checklist that you're then presenting to the judge, that says I'm doing things the way I'm supposed to. I'm following the appropriate cleaning procedures for my commercial kitchen, right? I'm boiling this at the specific number of degrees for X amount of time, and here's the log showing that I've done so, right? So it's protecting you. It's intended to protect you. Is it still a hassle? Yes. But the goal is to have that in writing, have that in place so that you can explain it to a judge and have the case dismissed. Last line of defense, right? Judge comes back, says, nope, you missed a step. You left that crate of cheese out in the sun for too long. And these 3 people got food poisoning. You have to pay damages. You have to pay the hospital bill, whatever it is, right? The you that has to pay is you, the business, right? If you are the business, which is the default position, the sole proprietor, you and the business are one and the same, right? Interchangeable. Then your assets are technically business assets, right? Everything you own, everything you have is the business because you are it. There is no differentiation between those two entities. If you take the extra step of creating a legal entity, C Corp, S Corp, LLC, whatever it is, then that is the entity being sued, right? You might own it 100%. You might work for that company, but the company is what is being sued, right? And therefore your personal assets are separate from company assets. That's the goal of the legal entity. 2 legal entities now, you and the business. There's a lot that goes into that. We could talk about the LLC formation. That's kind of the base model. Then you have the S Corp, which has a tax benefit, but is treated like the LLC. And then you have the C Corporation, which is doubly taxed. It's taxed on the personal level and the business level, but is useful if you have multiple tranches of ownership or different types of investor, right? So that's kind of the 3-part process there. But the base model, LLC, $175 filing fee. You got to put together, a couple page application, which you can print off, the website that the state provides. Relatively easy, right? I'm jumping around here for a moment. Sorry, I get off on tangents, but we cover all this information. I'm just doing it in a circuitous way. So a couple things I didn't touch on. Legitimacy is a big part of this as well, right? There's a marketing advantage to being a legal entity. Can you operate as a sole proprietor with a DBA, a doing business as, whatever company name? Absolutely. But sometimes that comma LLC, comma Inc, corporation, whatever it is, for your clients or your target market has weight, right? So again, there's the legal implications, there's the protecting yourself, but is it equally important to have your customer know that you've taken that extra step? Maybe. Depends on the customer base you're looking at, right? Bookkeeping is important. I want to point this out, right? So to keep that separation, that legal separation from the business in place in the event of a lawsuit where you're talking to, you need to have separate books, right? That needs to be a clear delineation financially, as well as, just having the LLC name. The reason for that is that essentially it shows that you're continuing to operate as an individual and as a business. Otherwise, the judge may look at it and say, well, yeah, you filed that LLC 3 years ago, but you haven't paid any attention to it. So I don't have to either. It's called piercing the corporate veil. It's the term for it. So keeping separate books, is it your business? Absolutely. Can you pay yourself? Yeah, it's your business. But take one extra step rather than spending business funds personally, right? So one, have 2 separate bank accounts, and 2, pay yourself. Write yourself a check. Take cash out and give yourself cash, right? Do an electronic deposit, whatever it is. That extra step before you buy personal stuff is enough to keep that separation in place legally. Investors are also a part of that, right? So investors may want some legal formation that they have part ownership in, right? Or, 50-50 split, whatever it is. You can't, as a sole proprietor, you can't have investors, right? That's just people giving you money, right? So keep that separate. I'm going to hop back to talk about taxes. Actually, I'm going to hop back twice. So financing, right? So going back to that idea of, okay, I've got this business plan. I've got this idea in my head. I need to get some money for it, right? I'm looking at my sources and uses document, which is essentially a document of saying, okay, what are my uses of cash to get this business off the ground? I need these pieces of equipment. I need this website. I need a down payment on my insurance or my lease. I need some inventory and working capital. I'm going to run at a loss for a period of time, so I'd like some extra cash on hand. That's called your uses of cash. So as you're sitting down and mapping that out, you're saying, okay, where am I spending money to get this off the ground? And how much do I need in total to get where I want to go, right? Not just to get my first sale, but how much do I need to carry this forward? We'll talk about cash flow projections in a moment. The offset to uses of cash is called your sources of cash. Your sources of cash have to be equal to your uses of cash. And your sources of cash are essentially, where is all this money coming from? If all this money is coming from me, great, that's the end of the conversation. I've got enough in the bank account, I'm going to fund myself. Bootstrap this, right? Sources of cash may also include the 3 F's, right? Friends, family, fools, right? Personal investors, people that I know that can just give me cash. That's great because that doesn't require a huge written business plan. It doesn't require a conversation with a lender. Maybe I'm a little more flexible on my payment terms than the bank's willing to look at, so I can use that. Maybe the landlord, if you're looking to do like significant fit out to the space, you can work that into the lease, have the landlord front some of that cost. The uses of cash become the sources of cash and match that up. Same thing with inventory, work in progress. You can say, hey, maybe my vendors that I'm buying from are willing to give me terms. Maybe they can give me this inventory and 30 days to pay it back or 60 days to pay it back, right? Sources and uses. Let's match these things up. The last source, right, is typically a lender, a commercial bank, where you put on a nice shirt or a tie and you go in and you talk to the commercial lender and you say, here's my business plan. It lays out how I'm going to communicate with my customers, what they're going to pay me to do X, Y, Z, how many customers I expect to have, my revenue. Here's where I'm positioned in the market, right? My competitors. Here's how I'm communicating, my marketing plan. And here are my overhead costs, right? My rent, my insurance, my utilities. I've gone through and done all this math. And look, Mr. or Mrs. Lender, I've got money left over at the end of the day, and that can pay you back, right? So number one reason business fail isn't that they don't secure the money, right? It isn't that they don't get the loan. It's that they don't plan ahead enough, right? So one of the things that you're going to ask for, one of the uses of cash, is called working capital. And the concept of working capital is essentially, if I look forward conservatively, I do a set of projections based on my business plan, my marketing plan, my communication, my number of customers that I expect. And in the first month, I lose $5,000. And in the second month, more people hear about me and I have another grand opening event and I invite more people and I only lose $3,000. And in the third month, some of my marketing gets some traction and I have some return customers and I only lose $1,000. And then look, in the fourth month, I'm profitable. And after month 4 and onward, I make money. But I lose $9,000 before I get there. So on day 1, I need at least $9,001 sitting in my bank account. That concept is called working capital. And the number one reason businesses fail is because they are undercapitalized. They do not have enough working capital on hand. And that's because their cash flow projections are too optimistic, right? So all of these things, the financing, how do I repay my debt? Do I have interest-only periods? Do I have to pay principal and interest right off the bat? My pricing, my hiring, when do I add employees? Where am I positioning myself in the market? And my number of sales. 70% of your business plan, when given to a lender, is the justification for revenue, right? Think about it. Think about marketing plan, advertising, target customer, price point, competitors, right? Are all trying to say, hey, if I communicate this to these people at this time, then I can expect this number of sales. If I continue to communicate at this level, here's my advertising budget, here's what I plan on doing with it, I can generate this number of sales each month. And by year 2, year 3, year 5, I start getting some traction. I get recurring customers, enough are leaving reviews that people who Google restaurant in Lewiston, Auburn, my name is at the top. And, passive marketing, I'm not paying for it, but they're coming in. Right? Good mouth-to-mouth referrals, whatever it is. It takes time to get there. And are you conservative enough when you're looking ahead to say, okay, I can get that done with this amount in the bank account. And I'm accounting for enough working capital, enough of a buffer to absorb some surprises along the way, right? So you see cash flow projections look something like this, and we've got other models and we have templates and everything. So if you have questions on this, I have yet to talk to a business owner. I've worked with more than 1,000 clients in the state of Maine. Not one has said that they started a business because they like playing in Excel, right? That's not why you're doing what you're doing. I'll readily acknowledge that. But this model, this cash flow projection, is what lenders want, right? This is the language that they speak. Mm-hmm. So if you can speak that language, they will be confident in you. And if you know what they're asking, which is really, how much do you need and how are you going to pay me back? Then you can speak to that. You understand that part of it, right? So this is a different language, but it's the same information that you already know, that you're already thinking about, that you're living, right? So make sure you speak their language when you're going in and talking to them. But more importantly, for your own well-being and comfort and being able to sleep at night, understand what it means to you. How much money do you need when you conservatively look ahead before you can pull that trigger and put yourself out there and start spending that uses of cash, right? And that's the fun part, is then you're anticipating and and you're, checking it and you're saying, okay, this was my number of customers that I needed this week. Am I winning or am I losing? Right? Am I covering my costs or not quite yet? The reason I put that section before the taxes section is because your taxes are a direct result of this, right? So whether you're a sole proprietor or an LLC, you'll file what's called a Schedule C with your personal taxes at your end. And a Schedule C essentially lays this out. So, okay, in my first year of business, I made $70,000, right? People paid me $70,000 to do this work. And it cost me $50,000 in inventory purchases, in advertising and marketing, in legal fees, in, lease, rent, utilities, whatever it is. So my net income, my bottom line, my profit was $20,000. That's what the IRS wants to know, right? So when your accountant or your bookkeeper or your advisor says, keep your receipts, it's because if you don't have expenses, then the IRS says, wow, you did 70 grand in revenue, you're going to pay us taxes on $70,000. If you say, hey, I did 70,000 in revenue, but I spent $50,000 to get there, the IRS says, great, you owe us taxes on $20,000, your net income, right? On the 20,000, you'll pay 15.3% self-employment tax, and then 10 to 15% state and federal, depending on your tax bracket and other sources of income, right? So usually I say, okay, look at this cash flow, figure out what you expect to do in the first year of your business, and your net income, you should put aside at least 30% of that in anticipated taxes. People say, okay, well, what about quarterly taxes? I hear I have to pay quarterly taxes. Sure, once you have an established business, you should be paying quarterly taxes, right? In the first year of business, you have no precedent to make quarterly tax payments on. So you're not really obligated to, unless you start with a huge business. If you're doing over $1 million in sales in your first year, all right, talk to an accountant, make sure you're allocating the right amount. Even after the first year, to be honest, the penalty associated with not paying quarterly taxes is essentially the interest rate that the federal and state government would have gotten had you paid quarterly taxes on that. So it scales with the strength of your net income. If you put $300,000 to your bottom line and you're not paying quarterly taxes, that's pretty substantial. If you're putting $10,000 to the bottom line and you're not paying quarterly taxes, $50, $100 maybe. So again, probably not going to break the bank in the first year or two of doing business if you're worried about that or don't want to deal with that. However, anytime we talk about taxes, anytime we talk about tax liability, you should have an accountant. And there's two reasons for that, right? So the first reason is the obvious one. Who do I trust with this? Who's doing professional development in this every year? Who understands the ins and outs of our obligations? Accountants, that's what they're paid for. That's how they maintain their CPA license, right? So use an accountant for that. Secondly, something that's a little misunderstood, accountants have insurance. They have errors and omissions insurance, right? So if an accountant tells you to do something and you do it, and the IRS takes umbrage with it and says, hey, you owe us back taxes, who's responsible for that? You, but also the accountant whose advice you were following, right? So you can go back to that accountant and say, listen, you've got insurance that protects you. You made a mistake in this, right? You have equal liability here, and they call their insurance and they deal with it. So get somebody else on the hook with you when you start talking about that, because, having to deal with the IRS on your own is a pain. Same thing with legal entity formation, right? Partnership agreements, that waiver that we talked about that you have customers sign, attorneys, right? Same thing. Right? Can you find a form online, fill it out, and have clients sign it? Sure, right? Absolutely. How enforceable is it in a court of law? How enforceable is it in the state of Maine? I don't know. You don't know either, right? That's, if it comes time and push comes to shove and you're sitting in front of a judge trying to explain the document that you're looking at, do you have the training to do that? Do you have the confidence to do it? Right. So paying an attorney to help you with those things gets them on the hook if something, if push comes to shove and you're trying to defend it or explain it. So not saying you have to in either of those cases. Plenty of small businesses file their own taxes. Plenty of small businesses file their own LLC formations or do their own partnership agreements. It's easier to do that now and pay a little bit extra to have somebody else give you that than it is when the issue arises, right? It's cheaper to do it now than later. So again, it's that risk. It's that balance, and that's personal. Right, we don't advise on that. We just say, here are the options. You decide, right? Choose your own adventure. Any questions on that? Oh, sorry, Austin, you said, what's the tax rate again? So the tax rate in Maine for an LLC or a Schedule C filing is 15.3% self-employment tax, which kind of covers the SUTA, FUTA, FICA, mess, all of that. And then 10 to 15% state and federal. And that's the slightly more flexible piece, depending on the other sources of income in your tax bracket. So sorry, I'm just seeing some of these questions, so I just want to make sure I'm answering them. And so Anna said, if the veil is pierced, that legal veil, piercing the corporate veil, is there a process to remediate? Like you use the wrong card for a transaction, self-reporting mechanism, or a way in which to walk that back? Yes, right. So the separate bank accounts isn't the requirement necessarily, but it's one of those they'll spot check and they'll try to find ways to pierce the corporate veil. If the attorney on the other side is suing you and trying to find ways to get as much asset base as possible for their client, their client's damages, then part of their job is reviewing corporate financial statements and making sure that they're as clean as possible, right? So when it comes to file taxes at the end of the year, can you have spent business money directly on personal? Yes. But did your accountant catch that and make sure that that was called a distribution and that you're paying taxes on it accordingly? Yes. Right. So can it happen? Yeah, absolutely. And does it happen? Sure. The more it happens, the less likely it is that you can correct every single one, and the less likely it is that you can that an opposing attorney won't catch it, right? And that's really what we're talking about here is, are you putting yourself in a position where everything is clean? Sure, take all the time you want looking through these documents. You're not going to find anything. All you're doing is racking up an attorney charge for your client, and that's not my problem, right? So yeah, it happens all the time, but I would just say, balance how often it happens with the infinitesimal amount of risk that it creates every time it happens, right? Every grain of sand creates a pile at some point. Does that answer your question?
Yeah. It does, thanks.
Okay, yeah. So Sophia said, love a copy of the cash flow chart. Absolutely. Please shoot us an email. I can include that. What else? What else should we talk about? Taxes. So that's all income taxes. When we're talking about the income generated by your business that you have to pay, it's net income, bottom line, right? So you keep your expenses, you show those expenses because those are pre-tax dollars, if you think about it like that, right? And your after-tax dollars are what you get to keep. And it also covers self-employment taxes. Talked a little bit about that. Payroll taxes, expect to pay 18 to 25% higher for payroll than just the salary amount, right? You have to pay payroll taxes on top of that. People think of payroll taxes usually as the recipient of a W-2, where your salary is not what you get to take home. The employer, you, right, the owner, also pays an equivalent amount on top of that, right? So, a $50,000 salary, the take home is $35,000 or whatever, and the employee pays, $65,000, $70,000, right? Sorry, the employer pays $70,000. It's taxed on both sides of that. So best thing I can suggest, if you plan on hiring somebody, if you want to hire yourself and pay yourself, and I'll get to that in just a moment, hire a payroll company. There are fairly affordable payroll companies that will work with a small business, fewer than 5 employees, for $50 a month or whatever it is. It's cheaper than insurance. It's cheaper than accounting. It's one of the cheapest professional services out there. And they take care of all of that tax liability, all of that concern. All you have to do is make sure the right amount of money is in that bank account, every pay period. And they'll do the W-2 filing. They'll do whatever you need, right? So if you want to go that route, I think it's a small price to pay for, again, you get their errors and omissions insurance, you have their liability insurance covering you, you have their professional input, right? Great resource there. Sales tax. Right? If you are a retail salesperson, and we've got, I'll send you the link about who gets sales tax and who doesn't. That gets paid, as it's incurred. Right? So you are essentially collecting sales tax on behalf of the state. So you add that to whatever your product value is when you charge that to the customer, and then you remit that back to the state. So you take ownership of that money, that 6% or whatever it is for the product, and you pay it, right? Take ownership, pay it. So you can set up a sales tax account, you do it all online, you submit your total sales, you submit, what you pay the state. But just be aware of that. That's not annual, that's not quarterly, that is as it goes, right? Usually weekly or monthly. And then budgeting, right? So budgeting is very important. And I'll cover two concepts with this budgeting, right? So I'll cover your payroll, how you pay yourself, and how to budget. So we're going to hop back to budget for a moment. So looking at this, right? You'll see cash out expenses looking in the middle of this. Labor is one of those expense line items. The labor is W-2 employees, right? Or independent contractors, which we can talk about if you're curious. But W-2 employees are people who you hire. Most of you have likely acted as an employee and received W-2 payment, right? Salary or hourly, you are an employee of a company. You can be an employee for yourself. You can pay yourself in this line item. The benefit of that is that you pay taxes as you go, right? You think about the pay stub that you get, everything's been taken out. It is what it is, right? And then you reconcile that at year end, and usually it's pretty close. So some of my clients decide they just want to not have a headache. They just want to pay themselves whatever it is that the business can support. They put that line item in there, it takes care of itself. The downside to that is you pay a little bit more in taxes. As an employee, there are a couple things that you have to pay in taxes that aren't included in that 15.3% number I threw out before. I can't tell you what it is. That's a payroll company's job. I just know that you end up paying closer to 20% than 15.3% for that, right? The upside is you pay as you go. You're not worried about it. It's right in there. You can also take what's called the distribution. And a distribution is that electronic transfer from the bank account directly to you. It's that cash out of the business. It's the check written from the business to you, right? That's called the distribution. That is technically an after-tax event. And what that means is that if I look in my first year, let's say I do the math and I have a net income projected of $24,000, just for easy math, right? $2,000 a month. If I look at that, I say, okay, great. I'm going to profit $24,000. My net cash monthly, second to last line there, going to be $24,000. I'm going to pay myself $2,000 a month. Great. I get to the end of the year. I've paid myself $2,000 a month. I have $0 left in the bank account as anticipated. The IRS will charge me 15.3% self-employment tax and 10 to 15% state and federal based on a net income of $24,000. Right? Is it? My distributions are technically after tax. And if I do not anticipate that, then I'm going to be hit with a, whatever the math is, $8,000 tax bill at the end of the year with no cash to pay it. Right? So do the math first. Okay, I'm going to profit $16,000 after cash, and I'm going to take $1,000 a month, and then an additional $4,000 at the end of the year. Right? Perfect, right? You've set aside that $8,000. You expect to pay it. You'll pay less in taxes on those distributions, small amount less, but less, right? But you're responsible to then pay the income taxes at year end. Everybody understand that distinction? Sorry, now I'm seeing a question in the chat. Pay yourself as you go, just not use funds generated from your business for personal uses outside of the business. want to pay yourself. Sorry, Mike, I don't quite follow. So if I want to pay myself, I cannot use funds generated from the business for personal uses outside of the business as a way of paying yourself. So, so yeah, you could wait until year end, and a lot of business owners do that, where they say, okay, this is a secondary source of income for me. That's only a 10-hour-a-week job. I'm just going to wait till year end. I'm going to settle my taxes, and then I'm going to take a one-time distribution of all the remaining funds. Yeah, some businesses do that. Or they just leave it in the bank account. You know, the cash, once the taxes are paid on it, can really go anywhere. Or you can just not pay yourself, right? But the taxes still have to get paid annually, and you get paid annually. And you can mix these two methods, right? And actually anybody, almost everybody does, where they take a payroll. So if you opt to take a payroll for yourself, you know, you take that $2,000 a month and you pay your taxes as you go, and you get the W-2 at year end. That's an expense, right? That's right there, labor right in the middle. It reduces your net cash. It reduces your net income position, but it might not reduce it to zero, right? Maybe you have $10,000 left out there. Well, that still becomes a personal income line at the end of every year. So now you've got the $24,000 you've paid yourself as W-2 income, which you've already paid taxes on. And you have this $10,000, you know, one-time tax event, which you might pay $25,000 or, you know, $3,000 on. And then you take the rest out, right? So you paid yourself throughout the year, and then you have a one-time end of year distribution, depending on how excessively profitable the business was, right? Good holiday, right? Coming up, end of year. So any questions on those things? Talked about taxes, talked about, so licensing, permitting. Whoa, I'm way over time. Sorry about that. Licensing and permitting. Trouble, getting in trouble, potentially getting in trouble, or not getting in trouble with the state, local government. Taxes, don't get in trouble with the IRS. Customer focus, right? Okay, how do I protect myself from my own customers? Insurance, waivers, liability, contracts, whatever it is. Proper legal formation. 3 layers of defense. Now, one thing I didn't talk about is those are interchangeable, right? Some companies just have the LLC. They don't have insurance. They don't have any waivers or contracts. Some companies put a lot of emphasis on that waivers and contracts piece, and those are airtight. They don't worry about the legal formation. They don't worry about the insurance, right? All 3, great, whatever, right? Venn diagram method. Think about it like that. Right? If my insurance ends before my waivers or liability or whatever begin, my contracts begin, there's a gap, right? I could be sued for anything in this gap. If there's overlap, great. Does it have to be 100% redundant? No, but I want some overlap. I don't want there to be any gap, right? Legal formation protects me at the end. What have I missed? Naming. DBA is thrown out there. It's got doing business as. That has no legal protection, but it allows you to get a check written to the business name. Allows you to cash that check, right? It allows you to, I don't know, not much, advertise under the business name. It gives you a little bit of protection around the name itself, so someone can't start a business that's the exact same name as you in the same town. You can do a DBA at the state level or the local level. But it's essentially saying, you know, it's me, Rainer Large, doing business as Rainer's Hot Dogs. So if somebody writes a check to Rainer's Hot Dogs, me, Rainer Large, can go cash that check. Great. If I'm sued, it's still me, right? It's me, Rainer Large. LLC, corporate formation, that's that legal entity that's being created. You can have a legal entity with multiple DBAs. Right? That's common as well if you have different markets, but you have all of your bank filing under one account or your insurance under one account. You know, I'll see that sometimes with like a photographer who has a wedding focused business and, you know, does glamour shots on the side, right? So two different markets, two different websites, two different names, same company, right? So they have an LLC with two DBAs. That's fine, you could do that. Protection and trademarks, we don't get into that a lot, but if you have proprietary knowledge, if you have proprietary processes, if you have information, again, you might want to talk to an attorney about protecting that. Yeah, and that's one of those things, again, any of these things can be added as you go, right? So I'm comfortable with my insurance policy. All right, I'm growing beyond my own capacity. I really want to make sure this waiver is checked. I'm going to bring it to an attorney and have them review it and put a new waiver in place. Or, okay, I have enough risk. Now I'm going to add the LLC to protect my personal assets. Same thing with protection, with trademarks, with intellectual property. As you grow, that risk grows with you, right? What is the likelihood that you get knocked off and, you know, someone from China takes your products and sell it if you've only sold 10 of them? Probably pretty low. When you hit that $100,000 or, you know, 100,000 units sold, or, you know, you're growing, you know, regionally, all right, you know, maybe there's some protection that's worth putting in place there to start saying, hey, I've got something here. You know, there's demand, there's value associated with my brand. Time to start protecting it, shoring up those walls. Do you need an attorney? Yeah, pretty much, right? I always recommend having an attorney, even if it's, you know, most give you like a free half hour just to touch base. But you want to know who the attorney is that you're going to call before you have to call them, right? The worst thing that can happen is you get served papers, you get sued, you know, customer slips and falls, and starts screaming at you as they're carted off in the ambulance. And then you're trying to find an attorney, right? No. There's the attorney card. It's in my top drawer. Do I ever call him? Hopefully not, right? Hopefully it's something that I never have to worry about. But if I do need to call them, at least I know who it is I'm talking to and they can help me. And then any kind of liability that you have, it's easier and more affordable now to address it than it is down the road. Partnership agreements, this is huge, right? It's much more affordable and easier to form a partnership agreement when both partners are happy and working well together, and there's no money on the table. Right? Yeah, you got your uses of cash, you got your sources of cash, but we're still working together, right? So this is the time to put that partnership agreement to place. It's not when it's being tested. It's not once you've grown to $1 million company and your partner wants to bang left and you're focused on going right, and now it's contentious and you're in disagreements and you never liked their spouse anyway, right? That's not the time to go find an attorney and try to rewrite the contract that you had verbally agreed on back in the day, right? Do it now, put it in writing. It will protect you eventually, right? Every partnership ends. Death, divorce, right? One person buying out the other. Every partnership ends before one of the people want it to, right? So understand that eventuality will happen. It's guaranteed that one of you will leave that partnership before the other wants them to leave, or before the other is ready for that partnership to be dissolved. What does that look like? Easier to talk about now than then. Contracts, leases, rents, right? Those are liabilities that you're incurring. Make sure you understand them. A lot of those contracts are pretty consistent across the board for every small business. So it's not expensive. It's not egregiously expensive. It's always expensive to have an attorney, but it's not recreating the wheel to go in and say, hey, can you take a look at this lease with me and make sure I understand the terms of what I'm signing up for? Hey, you know, here's what my partner and I think we agree on. Is there anything we're missing? And can you put this into a legally binding document for us, right? The more work you do going into that meeting, the more affordable it is. If you go in and say, hey, my partner and I are thinking about starting a business, the attorney thinks, great, let's start from the beginning, right? If you say, hey, we're going to be 50-50 owners, here's our responsibilities, here's how the other one will buy the other out in the case that one of them wants to leave or needs to leave. Here's how we're going to value the company. You know, the more you kind of walk through it, the easier it is for the attorney to say, all right, here's the template, change these terms, you know, match what you're saying. You sign here, bada bing, bada boom, right? Do we have recommendations for small business CPAs and attorneys? Sure, absolutely. I'd say reach out to us, talk to the advisor in your area, and the advisors always have a list of professionals that we've worked with in the past. We're separated regionally. So a lot of us, you know, I'm in the Brunswick, Augusta, Topsom area. We're throughout the state. So please reach out, and I'd recommend trying to find your advisor regionally, but from that, the appropriate professional regionally, because that's someone you can go in and talk to and have that face-to-face. For those relationships that you're developing, insurance agent, accountant, attorney, right? Meet with 2 or 3, because it's a relationship, right? Banking, yes, as well, especially if you're a highly capitalized business or have a lot of equipment, you want that relationship. But the other 3 are people that you're going to lean on and go back to, right? And build that relationship with. So try a few and make sure that you have that comfort with them, because all 3 of those you're usually talking to in uncomfortable situations. So you don't want the intrapersonal to affect or be an additional barrier to whatever it is you're trying to deal with at that time. Yeah, EIN, it's a question that comes up a lot. Employee or employer identification number. Essentially, it's a social security number for your business, right? You can get one for you personally. You can get one for the LLC, S Corp, C Corp, whatever it is you're planning on forming. If you want to create a legal entity, wait until you've gotten that legal entity before you get the EIN. The EIN is free and it's online. You can do it right online at the IRS. Don't pay for it. It's a scam site that's trying to charge you for something that is easy to do. So, you know, you can get the EIN. What the EIN allows you to do is file taxes for that business. You need the EIN to do that, and to open a bank account in the business name specifically. You can open, you know, a small business bank account as a sole proprietor. That's just your name. Link it to your personal account. But if you want the business bank account to have your business name on it, you know, be able to write checks from the business, you would need an EIN to do that. Hiring employees, most of you probably aren't quite there yet, and I apologize. I am going overtime. This is being recorded. Like I said, I wax eloquently about these things. So if you do need to hop off, go elsewhere, please do so. We'll get you the information. Real quick though, employee versus independent contractor, and employees that W-2, right? The distinction there, we have a link to distinguish. It's about responsibility. If you are telling the employee when to show up, what to do, how to do it, you're giving them the equipment to do it. You know, they're basically an employee, right? You're restricting them from working for competitors, right? All of those things increase your responsibility for them, increase the likelihood that you have to call them an employee. Independent contractor, you have less responsibility for. That is the idea of, it's a contractor, right? So groundskeeper, somebody that you were saying, hey, bring your own equipment, do your own process. I just need this to be done this week, right? Or every other week, you're going to come and mow. Okay. You know, they show up, they bring their lawnmower, they go clockwise one week and counterclockwise the next week and diagonal whenever they want. Sure, whatever, right? You pay them $200 every time they do it. Independent contractor, easy. Benefit of an independent contractor, you need a contract, right? It's signed. They have their own insurance. That is the implication of an independent contractor. They are responsible for themselves. They pay their own taxes, right? You show that $200 payment as an expense on your business, and that's it. They're responsible for their own W-2, their own whatever. Employee, you are responsible for. You pay them a set hourly rate, you pay them a salary, you pay them a commission, whatever it is, you're responsible to pay the employer percentage of payroll taxes, you're responsible to make sure that they pay their taxes, file all that. Your insurance covers the employees, right? Your liability insurance covers their actions. You're responsible for their quality of work. So you have to follow behind them and say, hey, you're good, bad, whatever. Policy manuals, employee handbooks, managing payroll. We talked about payroll. If you're planning on hiring somebody and you want like a checklist of what to do, what to keep on file, please reach out. We have all that information. Happy to go through it. The policy manuals, employee handbooks, those are really to protect you, right? That is to set you up to have the difficult conversation. So again, those things are created. You hope you never have to refer back to them. But when the employee starts showing up at 9:15 and then it's 9:20 and then it's 9:35, are you just having a tough conversation 101 and explaining your expectations, or do you have something to point back to, right? So give yourself that tool to put yourself on the same side of the table as your employee and say, hey, this is the expectation. We talked about this on day one. Here's the process. This is your verbal warning. And next time it will be a written warning. And then unfortunately, I'm going to have to let you go, right? So the more you have that readily accessible to point to, the more you've communicated that with them. Same process as the contract you have with your customers, right? The goal is educational. The ancillary pessimistic benefit is that you're putting yourself in a position to have that hard conversation. Grand opening, didn't talk about this. It goes back to that original concept, right? Okay, we've got our target market, we've identified, we've got where we fit on that marketing triangle, where the gap is. All right, how do I maximize my month one sales? How do I make sure that gradual incline isn't...
In a particular way, they're really unlegible, or they feel...
So grand opening is a great process. A lot of chambers of commerce love helping you with this. You can reach out to the town, you can reach out to us, and we might be able to help put it out there, right? Grand reopening, grand opening, grand event, right? Do a soft opening for friends or family, make them feel exclusive. Do a grand opening the next week, do a grand reopening the week after that, whatever it is, right? Maximize that benefit. Understand who might show up, how many people might show up, offer what you want to offer to try to incentivize people to come, and be ready, right? Have it be a fun, joyous occasion instead of a stressful one. I think that's it. Yeah, sorry. Jumping all over the place. But we made it. Appreciate your patience and time as we went through that. The website there, www.mainspdc.org. Upper right corner of that is the request advising link. That will get you assigned to an advisor. Like I said at the beginning, we're here to help. We prefer the one-on-one time. We do some of these, but mostly it's to just kind of disseminate some information and recruit people to come and meet with us. We love it. We're free. It's confidential. We're here for you. So please don't hesitate to reach out, particularly if you have other questions or want to do a deeper dive. I'll send a bunch of this information out. If I missed anything, or you'd like additional resources that I mentioned but don't include in my email, respond, right? Please let me know and I'll get you that stuff. We've got templates and everything. We're here to provide. Thank you, everybody. Have a great weekend. I'm going to stay on for another couple minutes just to see if anybody has any questions. But appreciate it.